We have seen more moving parts in this than usual, and you've pointed out in the past really how unusual it is to have PE firms competing against each other. What makes this time different?
Well, you're right. It's very rare. And in fact, we talked a little bit about this on Friday, the fact that, there's a lawsuit out there right now that alleges that private equity firms do not compete against one another. And they bring up the fact that you very rarely see this kind of deal jumping happen amongst private equity firms. Now, what makes this situation special, let's say, there are a couple of factors coming together. One is that there really aren't very many deals out there, Deirdre, especially of this size. And Blackstone has got a large fund to put to work. So it just shows that, there really aren't that many opportunities to put money to work.
And as you pointed out, too, right, since they've been public, they actually have to show that they are doing something with their $200 billion, right? Of course, because if you are not using it, then why do you have it?
Right, exactly. Also, here, Blackstone saw an opportunity because you had shareholders who were very vocally opposed to the deal. So they thought they had an angle in that sense because what they're essentially proposing is much different than what Michael Dell and Silver Lake have on the table. Their proposal is a full takeout of the company. What Blackstone is saying is that they'll give shareholders an option of rolling their equity into the deal or cashing out, which is a very different structure. So what we're going to see playing out over the next couple of weeks is the board trying to determine how to make this comparison, because it isn't an apples-to-apples comparison. And at the end of the day, the board has to determine whether, in fact, Blackstone or Carl Icahn's is superior. Only then does Silver Lake's matching right trigger. And then Silver Lake has 4 days to determine whether or not they will bump their offer in some way, shape, or form.
Eric, you've had tons of experience. You've had seats on numerous boards. What is going on, do you think, in the Dell board, in that boardroom?
Well, they find themselves in a completely perfect storm. One is you're seeing the beginning of the end of the PC era. So there's a complete change in their business model. They might not be completely prepared in the world of tablets and handheld devices.
Yeah, I mean, Michael Dell publicly said, oops, I missed that, basically.
Right, and they had various tries, and it didn't work out for them. Secondly, you're seeing a complete change in the IT departments with two major factors. One is the consumerization of enterprise IT, where users want to be able to use commonly used technology, easy to use, the same quality apps. They want to use that inside the company and not have these clunky old IT systems.
So basically you're saying that one thing that Dell is dealing with is that it is neither serving consumer needs nor enterprise needs. It's in this uncomfortable limbo.
It is, and at the same time they decided to put the company in play. So that created the perfect storm.
What about this idea that Michael Dell could lose his job as CEO, depending on which way this goes?
Well, obviously it'll depend who wins the company. It'll be a pity. I've known Michael almost from the very beginning. He was one of my biggest customers at Ziff Davis. Incredibly innovative, very hardworking. I hope he'll be able to stay on as the head of Dell.
Well, we learned actually not that long ago that Michael Dell is in fact talking to Blackstone. What his role will be in their version of this deal is still unclear, but he said from the outset that he was willing to work with any buyer who would propose the highest price. So he's talking to Blackstone. The question is, does he have a job under Blackstone's ownership?
Now, Cristina, one thing that you've reported on as well is that none of these companies really want outright responsibility for Dell, right? I mean, Carl Icahn doesn't, Blackstone doesn't, Silver Lake, they all want a piece, but they don't want the whole.
Right, because it's too complicated for them to really put their heads around. And to be honest, Blackstone may not want to consider this company as a going concern. Well, I should rephrase that. They may not want the company in its current shape and form. They may see value in sort of the sum of the parts analysis. So they may see real value in some of its businesses, but maybe together as a whole company, there could be more value to extract on the sum of the parts.
Eric, just as somebody who knows this space well, do you see one of these scenarios that makes more sense to you than another?
Look, it's hard to tell which way to go private is the best way. Personally, I don't understand why the company shouldn't or couldn't stay public and do the things that it needs to do, as a public company. Going private doesn't.
Because Michael Dell's ego is hurt. He sees his stock price keep sinking, despite the fact that he's trying to turn the company around, and you know, that could be
well,
why.
and other people have said, look, he doesn't want to leave this legacy of firing departments, laying off hundreds or thousands of people, and that's a big part of it. But it's a point well made, and certainly something that we've talked about since this story broke. What is Dell going to be able to do as a private company that it couldn't as a public company?
Exactly, and you have the example of Amazon. Amazon, with Jeff Bezos, he's always said, you know, I'm not going to run the company for the next quarter. I'm going to do it for the long term. And as a result, he's assembled a group of investors who understands that vision. Perhaps Michael should be doing the same thing.